What up, everybody? My name is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse. I appreciate you being here. I want to go through some charts, specifically a couple crypto charts. Algorand, Apis had some movement. We're definitely seeing movement in Chiliz. Of course, we need to look at some of the news in crypto pertaining to FTX, Sam Bankman-Fried. Quite frankly, it's a lot better than talking about inflation for the last year, right? And because we're all involved in crypto, we want to keep our ears to the floor and our eyes peeled and always know what's going on. So we'll take a look at some of that, and we'll take a look at some of the technicals. Now, there has been a little bit of momentum. We are looking at Algorand right now on the minute. You can see it's had a nice pump. Should take a look, though, at the 5-minute and kind of smooth it out. And you can see it pivoted over here at 26 cents, and it's still rolling up. Let's look at an hour. That's the best way to really see where you're at. And you can see from my last video, it rejected here. We got our Jedi green lights, and boom, the price action is going over the 200 on the hourly. This is really good. I made alerts about it. I really like when we're strong on the hourly. I like to trade in and out on the hourly personally. Look, if it's your first time on the channel, who loves you, baby? Hit that subscribe, select all, and like it. Make me a comment. Let's get the video pushed out, and I appreciate you. If you're returning, you know I love you. Okay, another one that's been moving is ApeCoin, and you can see it made a low, a lower low, a lower low. The Jedi green lights went off, and the other day I had mentioned we were waiting for the 200 to come down and price action to go over the 200, and that's exactly what's happening. It is showing a little bit of weakness, it looks like. We'll see if it holds through the weekend. Okay, this is Sushi Swap. You can see it's finally found its low over here at $1.19. It's made its way over the 200, retested it twice on the minute. Let's smooth it out on the 5-minute. You can see it's just been in a downtrend, and finally it's found its bottom and it's moving up, but it might be getting rejected on the 200 on the 5-minute. And on the hourly, it's really clear to see the capitulation from the FTX and a bounce right off this support, a higher low, another higher low, a couple tests on the 200, and it came down below. And we'll just have to keep an eye on it and see where it goes. Sushi's down a lot on the year. We bought it at 102. It went way up to about $2, made almost 100%. It's come down. Looking to ride that one again at the right moment. We're still waiting on the dust to settle in the crypto market. That will not happen until we know the full effects of all the contagion and how many people are affected, and if there will be margin calls and liquidity crises, and if so, what are the choices that these firms are going to make as far as offloading lower conviction assets to prevent a margin call. Will that be crypto or will that be something else? We'll have to see. There's still a lot of questions, not a lot of answers. It is a developing story. We will keep abreast of it each and every day until we find out. But you can see the volatility is slowing. This is good. So it might have found a local bottom, and from here, as news comes out, we'll find out what direction we're going, but at least it's hovering. Now, Chiliz, on the other hand, has been showing enormous strength all day. It's been a top one all day. So this is on the hourly. I mean, it got the Jedi green lights and just pushed through the 200, and it's not stopping. Even on a 4-hour, look at this sucker go. It was rolling up. There's your FTX debacle. And even on a 4-hour, it's rolling. And check it. It's a leader. Even on the daily here, we went up. There's your FTX. Bounced off the 200. And boom, multiple follow-through days with longer, bigger, engulfing candles. Chiliz is looking strong. And this is Bitcoin on the hourly. It's basically just going sideways for several days. After the big capitulation, it came down, it found this new range, it tested the top, it tested the bottom, it broke out, it kind of tested it, it failed, came back up in the range, back over, retested the lower side, broke back out, fell back down into the range, and it's been hovering. It tried to break out. I'm telling you, this little sticky box of confluence between 16.2 and 16.7, it's a new little zone. It's a swing zone, a trader zone, a range-based trade area that you can go long and short inside of. It's definitely having trouble getting out of it. However, the 200 is coming down towards it, so maybe the third time that it knocks on the door, it'll get above. But again, crypto just is going to have to wait a little bit, and so are we. Ethereum, pretty much the same thing. It's hovering, but what I can tell you about Ethereum is this right here is the descending pattern that we were in for 12 months, the yellow line. If I show you on the daily, that's the 12-month primary downtrend, okay? We broke out of it. FTX thing happened. It came back in. It fought its way out. Let's go back to the hourly, and you can see that we came down, fought above, went below, fought on the line, fell below, broke out, came below, broke out, rejected on the 200, came below, bouncing, and now we're just right above that line. And if I back it up on the 5-minute, you'll see more closely. So there's that descending pattern that we were in, and you could see on the 5-minute that it is above it, but it's just kind of choppy and loose, and again, a lot of uncertainty, lack of conviction, and that's just what's going to happen right now until we get more news on the FTX situation.
That Sam Bankman-Fried and his colleagues were part of those counterparties. Wow.
Sonali, the issue a lot of people are going to have is, if this is happening at FTX, is it happening elsewhere?
Take us back, if you could, to when you first got the call from Sam and you first had a chance to look at the books. Because I think a lot of people are still trying to understand exactly what happened here. How much of this was about commingling? How much of this was about terrible marking of the books? What did you see?
Yeah, I think I got a call from Sam 48 hours after I made the tweet, but then we got a team on it. It was pretty clear pretty soon that there's misappropriation of user funds. The user funds are gone. At that point, clearly that he lied to his users, his investors, his VC investors, his employees. At that point, I thought I couldn't, like whatever data that's in the data room, we couldn't trust anymore. So it was quite hard for us to do that due diligence. So we didn't go very far.
Do you think he understood what he was doing?
But I think it will be very, very clear that Sam knows that he was using the user funds to do trading for Alameda.
How much of the funds can they not locate?
I think if you look at the declaration by John J. Ray, remember this is the man who oversaw the liquidation of the Enron bankruptcy as well to try to recoup funds. He had very strong language. He said that there was a complete failure of corporate controls, and he also cited concentration of control in the hands of a small group of people. Tracy Alloway of Bloomberg also pointed out some really interesting details in the footnotes of this filing that showed you loans that went from Alameda had gone to certain individuals, and certain amounts of this money was used to pay, according to this filing and the declaration from John Ray, to pay for personal assets of Sam Bankman-Fried as well as his deputies. So it is definitely worth a read, this filing.
Are those Twitter posts going to be a problem, do you think, Sonali?
In this filing, it said that Alameda made loans, we think, to the FTX executives.
They named him by name in the filing, and the amounts.
If Alameda wound up getting consumer money from FTX, this is like an FTX financing FTX executives in some kind of circular way.
And here we go. Sam Bankman-Fried rumor mill running amok, trading course, FBI extradition, and FTX hack. Rumors and speculations surrounding former FTX CEO SBF continue to bombard the crypto community as the effects of the FTX collapse proceeds to be felt throughout the crypto space.
It's because of the crypto exchange platform FTX, which is behind this token, named FTT. On November 6th, the token's value began to fall, losing more than 80% of its worth in the span of 72 hours. Once seen as a survivor in a struggling market, the fall of FTX has sent shockwaves through the cryptocurrency industry. So, what went wrong? FTX is the brainchild of Sam Bankman-Fried. He's commonly known as SBF on social media. He's been previously hailed as a savior of the crypto industry.
You were called the JP Morgan of crypto. Does that bother you or not?
It doesn't bother me too much.
Bankman-Fried founded the quantitative trading firm Alameda Research in 2017. 2 years later, he started FTX, an exchange platform for buying or selling cryptocurrencies. Right now, he's the majority owner of both firms. After its launch, FTX attracted major investments from Silicon Valley and Wall Street.
We've raised a few $1 billion over the course of the last couple of years, and we're a profitable business.
It grew into the fourth largest cryptocurrency exchange for derivatives trading. Celebrities promoted the platform in ads.
I'm getting into crypto with FTX. You in?
It's FTX. It's a safe and easy way to get into crypto.
I don't think so.
FTX was gaining steam, and in the process, often tussled with Binance, the world's largest crypto exchange by volume. As FTX grew in the industry, Bankman-Fried furthered his reputation as a crypto savior when digital asset prices collapsed earlier this year. He bailed out firms, spending about $1 billion. But that image didn't last. On November 2nd, CoinDesk published a report based on a leaked Alameda balance sheet. According to the leaked data, Alameda claimed it had over $14 billion in assets at the end of June, but most of that was FTX's tokens. Alameda CEO Caroline Ellison tweeted that the balance sheet wasn't complete. FTX and Alameda did not respond to a request for comment. Things escalated on November 6th when Binance said it would offload hundreds of millions of dollars of FTT. Binance did not respond to a request for comment. The announcement sparked mass withdrawals. That day, FTX processed $4 billion of transactions, many times the normal amount for a day. Some got backlogged, which sparked demand for more. By November 7th, that number ballooned to $6 billion. On the 8th, a day later, FTX's finances were in crisis. Binance stepped in and said it would buy the company. It seemed like FTX might have solved its liquidity problem. But on the 9th, Binance backed out of the non-binding acquisition. The next day, the Journal reported that FTX used money from customers to fund risky bets made by Alameda.
Nobody could have foreseen that SBF was willing to transfer billions of customer funds at his crypto exchange to help his crypto trading firm.
The Securities and Exchange Commission and Justice Department are investigating FTX, according to a person familiar with the matter.
This is not like the New York Stock Exchange or NASDAQ. They take people's money, they borrow against it, it's not much disclosure, and then they trade against their customers.
A spokesperson for the Justice Department declined to comment. Bankman-Fried told investors that FTX couldn't cover withdrawals since its collateral was dropping in value and couldn't be liquidated, according to people familiar with the matter. On the 11th, Bankman-Fried resigned as CEO, and FTX and Alameda filed for bankruptcy.
The fall of FTX and Sam Bankman-Fried might be good for crypto. You think? Let's ensure that the companies replacing FTX in the public eye understand what cryptocurrency is about and want to get to its core values. Never in my career have I seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information. The new FTX CEO, John Ray III, said in a legal filing on Thursday, from compromised system integrity and faulty regulatory oversight abroad to the concentration of control in the hands of a very small group of inexperienced, unsophisticated, and potentially compromised individuals. This situation is unprecedented. Remember, he was the one that handled the liquidation of Enron.
First, there's a growing jurisdiction battle over where bankruptcy proceedings should take place, the US or the Bahamas. On November 11th, the day that FTX founder Sam Bankman-Fried resigned, FTX and more than 130 corporate affiliates filed for Chapter 11 bankruptcy in Delaware. On November 15th, a Bahamas court-appointed liquidator filed for Chapter 15 bankruptcy in New York on behalf of FTX Digital Markets. He argued that the Bahamas has jurisdiction over FTX Digital and other entities that were operated by SBF out of a huge office complex in Nassau, calling it a blatant attempt to avoid the supervision of the court in Delaware and keep the FTX subsidiary in the Bahamas isolated from the rest of the company. They argue that all the proceedings should take place in a single bankruptcy court, the one in Delaware, so that the company can secure its assets. Speaking of FTX's new management, it looks like we'll be hearing a lot from John J. Ray. He's the new FTX CEO, and he has unwound Enron and other major corporate failures. In it, he pointed out that he has over 40 years of legal and restructuring experience, and that never in his career had he seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information. And regarding the balance sheets of FTX and its subsidiaries, Ray repeatedly said, "I do not have confidence in them." FTX's new management is now scrambling to figure out just how much money the company even has. So what does this all mean for customers? This is the largest collapse of a cryptocurrency exchange ever, and it's being handled by a bankruptcy system that hasn't yet figured out crypto. FTX has said that the number of creditors in bankruptcy could top 1 million.
Okay, let's catch you up on the top stories. First up, crypto VC firm Multicoin is warning that many trading firms will get wiped out from FTX's failure. In a letter to investors, the venture firm disclosed that its performance was down 55% for the month thanks to FTX's bankruptcy and the market sell-off that followed. What's worse, Multicoin says investors should expect the market to fall even more before it rebounds. The VC firm, which recently launched a $430 million fund aimed at early-stage crypto projects, said in the investor letter obtained by CNBC that it put, quote, entirely too much trust in FTX and had too many assets on the exchange. Of course, tracking down where exactly FTX's assets are has been a huge undertaking as bankruptcy proceedings get underway, and Bahamian officials just confirmed they're holding some of FTX's assets. In a statement, the Securities Commission of the Bahamas confirmed it directed the transfer of all digital assets of FTX Digital Markets, which is a subsidiary of FTX. Now, we don't know how much money was transferred, but research firm Elliptic says the $477 million hack over the weekend could be tied to the transfer. The directive from SCB also sets up a fight with U.S. regulators who claim they're the ones who have jurisdiction over bankruptcy proceedings. An emergency court filing from U.S. officials challenged Bahamian liquidators' authority in those proceedings. Exchanges have scrambled to release proof of reserves and reassure customers their funds are safe. At the same time, though, a report from Bank of America found that these statements may have too many shortcomings because they're only a snapshot in time. Exchanges could borrow money right before the statement to boost reserves or manipulate third-party auditing firms to paint a better picture for their reserves.
And oh boy, FTX meltdown triggers FINRA into probing crypto comms. The examination comes in the wake of the FTX debacle, a crypto exchange found to be mismanaging customer funds by simply lying about their operations. The Financial Industry Regulatory Authority, FINRA, the American Self-Regulatory Organization, has launched an examination into the firm's retail communications concerning crypto products and services offered by them. The regulatory body, in an official notice, announced that it is launching a targeted exam on firms on how they handled retail communications between July 1st and the end of September. Genesis sought $1 billion in emergency loan but did not get it. A confidential document uncovered by the Wall Street Journal depicts Genesis' request for $1 billion loan to recoup liquidity as a result of the FTX bailout. And speaking of Genesis, who's one of the main lenders for Grayscale, GBTC Community fears FTX implosion might affect Grayscale. Now, Grayscale holds over 635,000 Bitcoin worth over 10 billion and 3.1 million Ethereum valued at 3.7 billion. FTX fallout may be far-reaching. The crypto community has speculated that the FTX implosion might have affected Grayscale's parent company, Digital Currency Group. Underneath Digital Currency Group is also CoinDesk. Okay, so you have Genesis, CoinDesk, Grayscale. There are others, but Genesis is a big lending arm in the crypto community. So if they're having problems, there's a lot of problems still to come. This needs to be rectified quickly and immediately with Genesis. All right, guys, Bitcoin exit from crypto exchange rises now to 220,000 Bitcoin over the past 10 days. The withdrawals began earlier in November as suspicions rose about FTX's solvency. All right, look, guys, I hope you enjoyed the video. I got a little funky, bassy beat that I've been tripping out here on the end while I've been editing. And now I'm just going to let it drop for a second, and then we're going to close it down. We'll see you tomorrow. I appreciate you. My name is Chris, and welcome to the